Man, with so much going on in the markets, it is so easy to get lost in the day-to-day headlines, right? But today, we're going to cut through all of that. We're going to follow the money and see where it's really flowing in what some people are calling the Great Rotation. So let's do it. Let's separate the true signal from all that market noise.
So, to really get what's at stake here, we have to start in Japan. As the yen keeps getting weaker, life is becoming completely unaffordable for a lot of people there. And what's the government solution? Well, it's to fight inflation by creating more inflation and debasing their currency. And look, this isn't just some local problem. It's a huge warning sign, a signpost for the entire global economy.
And that really brings us to the big question, doesn't it? The market sentiment index is screaming extreme fear. Major assets are selling off. There's just so much confusing information flying around. So amidst all this chaos, where is the smart money actually heading? Let's dig in and separate that signal from the noise.
All right, first up, let's tackle a huge piece of noise that's been scaring the heck out of the precious metals community, this whole story about Russia and its gold reserves.
You've probably seen these headlines. The story goes that Russia, which has been a massive buyer of gold, is now suddenly selling it off. And of course, that sparked this widespread fear that the huge wave of central bank gold buying, which has been a major driver of prices, is all coming to an end. But here's the thing. That headline, it doesn't even come close to telling the real story. What's really going on is this incredibly clever financial maneuver. You could call it a liquidity loop. It's basically a way for Russia to use its gold to pay its bills, all without dumping a single ounce on the international market.
Okay, let's break this down real simple. First, the government's wealth fund sells some gold to its own central bank. In return, it gets brand new rubles. Then, the government spends those rubles on whatever it needs. Now, to soak up that new cash and stop inflation from getting out of hand, the central bank turns around and sells a little bit of gold to its own citizens, which pulls those rubles back out of the system. And here's the final brilliant step. It uses those exact same rubles to buy the exact same amount of gold from its local miners. You see? It's a completely closed loop, all happening right inside Russia.
So, here's the bottom line, the crucial point. Russia isn't dumping gold on the world. This is all an internal process. But even more importantly, it's a massive proof of concept. It shows that a country with a strong gold stash can fund itself and operate completely outside of the US dollar system. So instead of being bad news, this is actually an incredibly bullish signal for gold's role as a top-tier global reserve asset.
All right, let's pivot to the second big piece of market noise. This popular idea that money is just fleeing from safe havens like gold and getting piled into hot tech stocks and crypto. So you hear all this hype, right? Especially on social media, that the Great Rotation means everyone is jumping into riskier assets. But the reality on the ground, well, it tells a completely different story. The numbers just do not back this narrative up. Not at all. And wow, the data here just lays it all out. I mean, look at this. From their recent highs, Ethereum is down a whopping 40%. Bitcoin is down 30%. Even the market darlings like Palantir and Nvidia have taken big hits. Now compare that to gold and silver, which have held up incredibly well, down only about 7%. This so-called rotation into tech and crypto, it's just not happening.
So, if the money isn't flowing from metals to tech, then where is the real Great Rotation happening? Well, this is where we find the real signal.
See, the real Great Rotation, it's something way bigger, way more fundamental. It's a quiet but massive shift of capital out of the bond market, and remember, that's the largest financial market in the world, and into the safety of precious metals.
And you gotta understand, this isn't about people just chasing the next hot trend or meme stock. This is about a deep structural change. It's being driven by a growing loss of trust in government-issued fiat currencies, and by extension, the government bonds that are backed by them. People are starting to look for real, tangible value. But hey, don't just take my word for it. Let's look at the hard data, because the numbers here, well, they're absolutely stunning.
You know, we've all seen this incredible bull run in stocks over the last few years. But what if I told you that if you had just been steadily investing the same amount of money every month since January 2020, precious metals would have actually given you a much better return? And here it is. We're even accounting for a 10% premium on physical metals, and we're factoring in all dividend reinvestment for the S&P 500. And the results are just crystal clear. Silver is up 81%, gold is up 79%. Meanwhile, the S&P 500 is up 59%. Metals aren't just keeping up, they are blowing past the stock market.
This chart just makes it impossible to ignore. I mean, look at that gap. The space between metals and the broader stock market is huge, and it shines a spotlight on a trend that most of the mainstream financial media has completely, totally missed.
All right, so let's tie all this together and really focus on what this signal is telling us about the future.
We have seen this movie before. After the dot-com crash between 2012, metals went on an absolute tear, soaring about 500%, while stocks basically went nowhere. Today, we're seeing Japan, the single biggest owner of U.S. debt, actively destroying its own currency. And, looking forward, any major stock market crash will almost certainly trigger a new flood of stimulus and bailouts, which, historically, sends a tidal wave of capital rushing into gold and silver.
And if you think this is just some fringe theory, get this. Over 40%, more than 40% of Russia's national reserves are now held in physical gold. That is a massive commitment, and it's a crystal-clear signal that major world powers are actively moving away from paper assets and towards tangible stores of value.
So that brings us right back to the final and most important question. It is so easy to get distracted by the daily noise and the drama of the markets. But when all that noise finally fades away, it's the underlying signal that truly matters. The data shows a clear, undeniable rotation is happening. So the only question left is, what signal will you be following?